Hello traders, the title of the video is the difference between breakaway and runaway gaps in the financial market. A financial instrument can gap up or gap down. Alright, so if you look carefully on my chart here, you can see that this stock, one second please, did gap down this session here. This session here, you see that it did gap down. Everybody agrees. It means that there is a hole. You can see that the price just went from one level and dropped down to another level. So when you see a hole like that, that hole, that's what we call the gap. Or it gapped down there, and now as you can see here, it's a very kangaroo, if you like, it's a kangaroo stock. Some stock always, very often will gap down. So you want to understand the psychology of some of the financial instrument. And here it is, a gap up here. Alright, on the daily chart, this session here, it gap up here. Here you can see, if you look carefully here, it did gap up here. There's a hole there, it gap up again. It's a kangaroo, this one, it gap down. It's a stock that is going all over the place. By the way, this is what we call Canopy Growth Corporation, EPIC CGC. Okay, CGC, Charlie Golf Charlie. All right, gap up all over the place. So some stock you will notice here gap up again, just gapping up, gapping down, gap down, blah blah blah. So we want to talk about the difference between a breakaway gap and a runaway gap in the financial market. What I want you to do for the next 15 minutes or so, to forget everything else that they have taught you before about the breakaway and the runaway gap, because I want to share with you practical, from my viewpoint, from my own experience, how I define a breakaway gap and a runaway gap. The reason why I say to you to forget about everything that you have learned before, so that you don't get into conflict with this tutorial, so you start fighting and say, George, I disagree. So listen to me, all right? This is from my own experience, and then decide what you want to do with that information. That's what I say to you, to forget everything that you know more before about a gap, breakaway gap and a runaway gap. Now, because if you want to understand the gap trading, I recommend to traders to learn also about the Elliott wave. Now, I'm teaching Elliott wave theory on our YouTube channel, 24 Elliott waves. YouTube search 24 Elliott, digit 2, digit 4 Elliott wave. Now, during the first wave, all right, that's when we have what we call the breakaway gap. Now, Elliott wave traders know about the wave count guidelines. One of the guidelines that we use is that before the first wave, you will see a consolidation like this one here. See, the price will consolidate either in a triangle or in a horizontal channel like this. And the gap that we see above a triangle or above a consolidation, that's what we call a breakaway gap. Why is it breakaway? Because when we have horizontal channel like this, we have what we call, according to the market profile, we call what we say a balanced market. In theory, not in reality, but in theory, it means that there is equal force between the bullish traders and the bearish traders. So the price equal force between the two group of traders going on ups and down, either in horizontal channel, and suddenly we have imbalance, all right, imbalance, market. So one group is now winning the fight. Before there was equal influence, now one group is taking over, winning the race. So the breakaway gap will occur after a consolidation in a triangle, or after or during the first wave. The best definition for the breakaway gap is the gap that occurs just before the first wave. Here it is. This is a beautiful breakaway gap here. There was a consolidation in balanced market, but it break away like this. Those who are using the TC2000, if you click on Easy Scan here, you will see, check out for gap up with momentum. So look for, here it is, gap up with momentum. That's how I have this list here. Okay. You can also look for gap down with momentum. All right. So this is a breakaway gap. So all in all, if somebody asks you what George calls, okay, a breakaway, because I'm talking about my own viewpoint, it's a breakaway gap will occur during the first wave. It's the gap that occurred during the first wave. It's likely to be filled. So when we see that the breakaway gap is likely to be filled, it means that the price can come into that session sometime. But remember that when we are saying during the first wave, it doesn't mean at the beginning of the first wave, you may see the price going up first like this, and then it will gap up again, and then stop, and then come back down, fill that breakaway gap. So something like this, all right, pay attention. Price may go up first, and then we have the gap somewhere there during the first wave, and then it continue to go up a little bit more, and then it come back down to form the second wave before the third wave. But here you can see that it happened at the beginning. Sometimes it may not happen at the beginning, but here, by the bottom line, breakaway gap, you're likely to see after a consolidation or a triangle, the price is about to go up. So there is a break away from the status quo, a break away from the balanced market. One group is now running away with the ball, like American football or like a rugby game. So you see sometimes the rugby player will come together, fighting, looking for the ball, and suddenly one player will take the ball and run away with it. That's the breakaway gap. Is that clear? So when we are also talking about breakaway gap, is all right. It's relating to the first wave very often. Now, before we continue, all right, don't get upset when people are talking about a breakaway gap in the third wave. All right, don't say that it's wrong. All right, but just know that the breakaway gap normally should occur during the first wave after a consolidation. All right. Remember what I just said. If anyone is talking about breakaway gap, either in the third or the fifth wave, don't get upset. There is a reason for it. I'll try to remember to explain to you why they are not completely wrong to talk about breakaway gap in other scenario. Okay, I'll talk about it in a minute. So that's about the breakaway gap. What is the runaway gap? Or a runaway gap. The runaway gap very often will not be filled. So here I was telling you that there will be a gap, it may be filled. This one will be difficult to be filled, it's a breakaway gap, but because it's at the beginning of the first wave, it may not be filled, but very often the breakaway gap will be filled. But the runaway gap, find it very difficult to be filled. Why? Because it usually occurs during the third area wave. If you want to become expert gap trader, learn also about, all right, gap trading. In fact, there is a web page at 24elliotwave.com about Elliott Wave gap trading. Okay, check, go to that website, 24elliotwave, all right, and go to the list of all the web pages and see something relating to gap trading, and you will see what I discussed there. All right. If you also want to know more about gap trading, go to dayprotrader.com. I'll try to look for those links and put in the comment section for you. All right. The runaway gap, first thing you want to remember, is not likely to be filled. Very often will not be filled. Sometimes may, but not very often will not be filled. But it's relating to the third Elliott wave. So the reason why it's difficult for the breakaway gap not to be filled is because during the third Elliott wave, the momentum is so strong and the price is just going up, no stop, just going up. Stochastic is overbought, RSI is overbought, everybody wants to sell, but the price is just going up. But because it's not going to come back to the zone, you see the gap there, it's a break, it's a runaway gap. So the price gap up and then just running away. It's not going to come back again because it's running away. So it's like a rugby player, catch the ball. Now he wants to score. It's not going back again. It's running to cross the line, yes or no? So that's the runaway gap. So the runaway gap, understand, from my viewpoint, in my experience, runaway gap are relating to the third area wave. And usually will not be filled, which means the prior will not pull back into the section of the gap. All right? Check our web pages at the Pro Traders and also at the 2-4 area wave. We don't kind of, the reason is the fourth wave is usually shallow. Yes or no? Usually shallow. Those who understand it's usually shallow. So, but if this is why we are saying the theory and the reality of the market. But if the gap occurs somewhere near the end of the third wave, if the runaway gap occurs towards the end of the third wave, it can be filled during the fourth wave, because when the fourth wave is underway, it may come into it because the gap is happening near the end. But generally, the runaway gap will occur somewhere near the midpoint of the third wave. So the third wave is underway, and then probably going out, running away fast. You see, you leg it fast, and then you gap up, and then leg it again, and then leg it non-stop without coming back. That's the runaway gap. So now I hope you will have a bit of idea about the runaway gap, okay, and the difference between the runaway gap and the breakaway gap. So the breakaway gap is relating to the first wave, will occur after a consolidation in a horizontal channel or a triangle. There was a balanced market or a consolidation, okay, either in a triangle or horizontal channel, and then the price breaks away. Is now alerting us that the momentum is going in one direction. It was balanced before, now it's going up or down, okay? That's why we say gap up with momentum, gap down with momentum. All right? Very important. Now, the runaway gap is relating to the third wave. Very often will not be filled. Price will not come into that session again. So the price run first up and then gap up and then continue to go up. Now, if you are trading gap but you don't know about area wave, you can call anything, and you will not trade gap very well at all because you don't understand area wave and you don't know which gap you are dealing with, and you can do all sorts of things. So for somebody who is trading, for instance, the runaway gap, he or she who understand also the area wave, know that this is a runaway gap, he will position himself in a way to participate in the trade without failing. All right, we'll come back to that in another tutorial when I'm going deeper and deeper about gap trading. All right, now, contrary to the runaway gap, the breakaway gap can be filled. I also told you that don't be upset when somebody else is saying that, talking about the breakaway gap, which myself sometimes I do, breakaway gap in the third wave. If somebody say breakaway gap in the third wave, they are not completely wrong. Why? Because sometimes you will see that during the third wave, if we have a complex third wave, all right, so the third wave is subdivided, all right, into 5 minor waves. But don't worry, even if you don't understand area wave. So price going up in the third wave, it's not going up in a straight line sometimes. So you'll be going up 1, 2, 3, 4, 5, forming the third wave. But when it's pulling back, sometimes that pullback can be a horizontal channel or a triangle. So price goes up fast and then slow down, either horizontal channel or a triangle, and then gap up. So people can talk about breakaway gap. Why? Because after if they're going out, if there was a consolidation and then it gap up. Though we are in a third wave, people are talking about breakaway gap. They are not completely wrong. All right? But in fact, it's a runaway gap. The same thing, the fifth wave also can be subdivided into 5 minor waves. So people can talk again about breakaway gap during the fifth wave if the pullback during the fifth wave, all right, is a consolidation or a triangle, all right, or after the fourth wave, if the fourth wave is a triangle, A, B, C, D, E triangle, or a consolidation, we may see a breakaway gap at the beginning of the fifth wave. So that's what I'm saying to you. Don't be surprised sometimes when people are talking about breakaway gap, that is not relating to the first wave. But you want to stick into your mind, the first thing that should come into your mind when people are talking about breakaway gap is what? The first wave. The reason also, so the bottom line about breakaway gap is that, was there a consolidation in a triangle or horizontal channel before the gap? If yes, we can call it a breakaway gap anytime and any place. But we do not want to forget that the first thing that should come into our mind should be the first wave. The runaway gap, all right? The runaway gap, the best place for it is the third wave. Very often will not be filled. But don't be surprised, sometime again, when people are talking about runaway gap in another scenario. So I don't want the video to be too long. I hope I have managed to explain to you the difference between the breakaway gap and the runaway gap in the financial market. In another tutorial, we'll be continuing the discussion about gap trading to help traders to understand exactly what is taking place. Before we wrap it up, I want to show you another financial instrument. Here it is. After doing my easy scan with my TC2 already stock, also you see went down, and then boom, up. Which gap is this one? All right. Which one is this one? Okay. Is there a consolidation? All right. What kind of gap is this one? Okay. I'll leave it to you. So don't worry too much about it. This one is a breakaway gap to a certain degree. It's not very clear because the consolidation is not very neat as such. Okay, but there was a small amount of 15-minute time frame. That's what I'm saying to you. It's not very neat here. So it's not very neat, but it's a breakaway gap. So price going down, then it should start going. You see, you oscillate a little bit here. All right, we can call this one kind of ending diagonal here. You see the triangle, and then you break away from it. All right. All right. Now I'll show you another one now in a minute. Okay. Why similar scenario again here. All right. I'm on a 15-minute time frame. Market noise. All right. Is the breakaway gap, and so on and so on. All right. If you have any question or suggestion, please put it in the comment section. In due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. All right. You think this is an essential tutorial that can help other gap traders? Feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. If you have not yet subscribed to our channel, whether you're on Facebook or you are on YouTube, come to our channel, okay, Day Pro Traders YouTube channel. Subscribe today, it is free, and click on the notification bell, ring the bell, so anytime we record a new video, you will be the first person to be notified. The reason why, if you're on Facebook or YouTube, you should subscribe to our YouTube channel, because sometimes I'm posting video first on YouTube, sometimes first on Facebook. Our Facebook page is stochastic-MACD, stochastic-MACD Facebook pages, all right? So then you find me there, and you can like our Facebook page also, all right? And follow us on Facebook and also on YouTube. So this will conclude our discussion today. A difference between breakaway and runaway gap in the financial market. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about the difference between breakaway and runaway gaps in the financial market. Happy trading to you all, and I will speak to you soon. Thank you for watching.